Hi guys, in this revision video, we are going to go through financial plan, fire insurance with co-insurance provision, income tax with PCB, medical insurance with co-insurance provision, network and graph theory, life insurance, as well as road tax. Let's get started. Halim is an engineer that works in company ABC and earns a monthly net salary of 7,000 ringgit. He earns a monthly rental of 900 ringgit from his property. Halim also works as a part-time tutor with a monthly income of 250 ringgit. The question has outlined all of his income. Then it goes on to say his estimated monthly expenses are as follows. So it gives you a list of expenses here, monthly expenses and how much in ringgit Malaysia. We'll go through this in a while. Prepare a financial plan for Halim. So now we are required to prepare a financial plan. Some questions would give you the frame of the financial plan. You just have to insert the values. Some questions don't give you the frame. And so you need to know the frame of the financial plan. So the financial plan consists of four things: the income, the monthly savings, fixed expenses, and the variable expenses. And we will end up with a final value of surplus or deficit of the income. First, let's draw out the table. The table will consist of income and expenditure on the first column, and the second column will just be the values in ringgit Malaysia. And you notice for the values, we have two columns. So the first one is net income. We start with income. Under net income, of course, we have, for Halim, he had three. He had his net salary, and then he had his monthly rental, as well as his earnings as a tutor. This is what we are going to list down here. First, we put the net salary. Net salary was 7,000 ringgit. And then tutor earnings, 250 ringgit. And rental income of 900 ringgit. And now we can total up. Total monthly income is 8,150. You just add these three values together. Now this total income is written on the left side, only for the total monthly income. And the second component here in the financial plan will be the monthly saving, monthly fixed saving. So you must write minus fixed monthly savings, and this amount, in this case, it is given. Under fixed monthly expenses, you can see we have monthly savings, fixed savings of 700 ringgit. This amount can also be calculated as 10% from the net salary. This is usually the amount that is saved. So here we will get an amount of 700 ringgit. And after the savings, then we have the income balance. How much is left from the income? Which is 8,500, this value, minus 700. This is the balance that's left to spend for the expenses. So this is the second part. So we've done net income, we've done the monthly fixed saving. Now we have the balance for expenses. And expenses is divided into two. That is either fixed expense or variable expense. So let's look at the list of expenses and classify them as either fixed or variable. I'm going to use F for fixed and V for variable. House installment. Whenever you see the word installment, installments have to be paid regardless of the financial situation. And so these are fixed expenses. They have to be paid every month. The amount is the same. So whenever you have property installment, this is fixed, house is fixed, the two houses are fixed, and the car is fixed as well. Now, what about parents' monthly allowance? If you're having difficulty deciding whether an expense is fixed or variable, you can try this method. If Halim loses his job, will he still need to pay this expense that month? In the case of parents' monthly allowance, no. Whereas when it comes to car installment or house installment, Halim cannot tell the bank, I've lost my job and I don't want to pay this month. That's not possible. So that's a fixed expense. So parents' monthly allowance is actually variable expense. It can go up and down. Toll and petrol depends on usage, variable. Food also depends on how much he spends on food. It's variable. House utilities also variable because it depends on the amount of electricity and the amount of water and the amount of the utilities that's used. So it is not fixed every month. It's not a fixed value. Monthly fixed savings is not under the expense part. It's under the second part as monthly fixed savings separately. Insurance premium. This amount is also going to be fixed. It's going to be paid every month, the same value every month, no matter what happens. So this is a fixed expense. Holiday expense. So here he's saving for holidays, and this is variable. So once we've divided into fixed and variable expenses, then we can add to our financial plan. After we have the income balance, the first thing we do is fixed expenses. So we have to minus monthly fixed expenses. So we list down the fixed expenses, the 2 installments for the house, and then we have the installment for the car, and then we have the insurance premium, and then you will have the total monthly fixed expenses. So total monthly fixed expenses, we only take the total of this, and the amount will be 3,880. So we just have to sum this up, add everything together, we get this amount. And then you do the same thing for variable expense as well. So we have variable expense, then you list it down, list down the amount, put everything down here. We have 5, and then the same thing, total it up. So we have total monthly variable expenses, put this amount here. And now finally we've listed everything down. We can find the surplus of income. So the last line will be surplus of income. So surplus of income can be calculated from income balance, and then we subtract the fixed expenses and subtract variable expenses, and that would be the surplus. So this surplus value can be positive or negative. If it's a positive value, that means cash flow is positive. If it is a negative value, it's not a surplus, it is a deficit, and cash flow is negative. Let's look at fire insurance policy. Mrs. Liu wants to buy fire insurance for her house, which has an insurable value of 650,000. This is the value of the house. The fire insurance policy she wants to buy has a co-insurance provision to insure 80% of its insurable value and a deductible of 3,500. When it comes to property insurance, there's always 3 ways to calculate compensation depending on the amount of insurance purchase as well as the type of loss. Let's explore that through the question. Calculate the amount of insurance required. Insurance required by Mrs. Liu for the house. Since this is an insurance policy with a co-insurance provision of 80%, the amount required will be equals to 80% of the insurable value. 80% of the value of the house. That's all she needs to buy. She doesn't need to buy the full value. So that would be 80 over 100. This is 80% times the insurable value, which is 650,000. And so the amount here will be 520,000. This is the amount that she is required to buy. So she can either buy the required amount or she can buy less. The compensation that she receives will depend on how much she buys, whether she buys the required amount or less. So let's explore that. There was a fire that damaged Mrs. Liu's house and resulted in a loss of 120,000. So first thing to note is this value is less than the amount purchased. The amount purchased was 520,000. Calculate the amount of compensation she will receive if her house was insured at the required amount. So the first scenario is she has bought the required amount of 520,000. In this case, the compensation calculation is very simple. Compensation will simply equals to the loss minus the deductible. The loss value is 120,000. All she needs to pay is the deductible. So the deductible is not borne by the insurance company. The deductible was set to 3,500. So all we have to do is subtract 3,500 ringgit. And so her total compensation will be 116,500 ringgit. This is the total compensation for a loss of 120,000 if she bought the required amount. Now let's say she didn't buy the required amount. Let's say she only insured her house at a sum of 450,000 instead of the required 520,000. So in this case, the compensation will not be a full compensation. It will not cover the full 120,000. The compensation will instead be a ratio, and that would be the amount purchased over the required amount, and this is the multiple, then we times the loss. So she's not going to get back all the loss. She will only get a fraction of it, that is determined by how much she purchased over the required amount. And then from here, we still need to minus the deductible. Deductible must always be taken away. Deductible is always borne by the policy holder. And so this will be equals to, she only bought 450,000 out of the required 520,000. This multiplied by the loss, and this is the amount that is covered. And she also needs to pay the deductible, so minus 3,500 again. And so her total compensation would only be 100,346 ringgit and 15 cents. This is the amount that she will be compensated for. She will not receive the full 120,000 minus deductible as she would have if she bought the required amount. And so the question goes on to ask you to calculate the co-insurance penalty. The co-insurance penalty will be the amount that she lost because she did not purchase the insurance at the required amount. She purchased less. When calculating the co-insurance penalty, we don't consider the deductible. And so co-insurance penalty will be equals to the amount that she should have been compensated for, which is 120,000 if she bought the full amount, minus the amount that she was compensated for because she didn't buy the full amount, which is 450,000 over 520,000 times the loss. This is the amount that she was compensated for, not including deductible. And so the value here is, the penalty that she is actually paying is 16,153 ringgit and 85 cents. This is the loss that she is bearing for not buying the insurance at the required amount. We have one more situation, and that is total loss. Mrs. Liu's house suffered a total loss. Everything is gone. Calculate the compensation she will receive if she insured her house at a sum of 380,000. So when it comes to total loss, again the compensation calculation is different. Compensation will be equals to amount purchased, the maximum amount that she bought, minus the deductible. So even though the house is completely gone, the maximum amount that she can get back is only the amount that she purchased. It will not be at the full value of the house. So if she bought the insurance for 380,000, then she can get 380,000 for total loss. But she still has to pay deductible, so minus 3,500. And so the compensation here will be 376,500 ringgit. Let's go to income tax. Mr. Munir's annual income in 2020 was 50,210 ringgit. He paid zakat amounting to 50 ringgit that year, and his total tax relief was 15,500 ringgit. He also made a donation of 300 to a government-approved hospital. Calculate his income tax payable. Before we can calculate the income tax payable, the first thing we need to calculate is chargeable income. Chargeable income is equals to the total annual income minus two things, that is tax exemptions. Tax exemptions usually come from donation made to government approved bodies, and we also have tax relief. And now we can calculate Mr. Munir's chargeable income, which is equals to, first we take the total annual income, which is 50,210 ringgit, and then we subtract exemptions. So here he's made 300 ringgit donation to government approved hospital. So this will be the tax exemption, and then we have the tax relief, 15,500 ringgit. Now what about the zakat? Zakat will come as a rebate. Rebate is only included in the second step of the calculation, not in the first step. First step is chargeable income. And so his chargeable income would be 34,410 ringgit. This means that he is taxed only based on 34,410 ringgit. Once we have calculated chargeable income, the first thing we need to check is if this value is less than 35,000. And so in this case, this value 34,410 is indeed less than 35,000. If the value is less than 35,000, then this taxpayer will be eligible for a rebate of 400 ringgit automatically. So this will be added on to the second calculation. And the second calculation is the income tax payable. So income tax payable will be equals to, now we need to look at the rate. So this amount 34,410 falls within this bracket, 20,000 to 35,000. And so for this bracket, the first 20,000 of the amount is taxed at 150 ringgit. And so the balance, the next 15,000 is taxed at 3%. You don't have to pay any attention to the second value. So now we are ready to calculate the income tax payable based on the tax bracket, and that is first 150 ringgit. This is for the first 20,000. And so the remainder, we have to calculate the remainder first, that is 34,410 minus 20,000. This is the amount that has not been taxed yet, and for this amount the tax rate is 3%. So we have to multiply with 3%, which is 3 over 100 or 0.03. So this is the income tax payable, and now we can include the rebates. So the total rebates we subtract from the amount payable, that is 50 ringgit for zakat plus 400 ringgit because the amount, the chargeable income is less than 35,000. And so the total tax payable by Mr. Munir is 132 ringgit and 30 cents. Mr. Munir had a monthly tax deduction, PCB, of 25 ringgit. Does he need to pay any more income tax after monthly deductions? Explain your answer. For this part of the question, monthly tax deduction is the amount that is taken away every month. And so first we calculate the total PCB. So total deductions, total PCB deduction equals to 25 ringgit times 12 months for a year. And so this amount is 300 ringgit. Now we can compare this to the tax payable. Earlier we calculated the income tax payable to be 132 ringgit and 30 cents. Now, this is significantly less than the deductions. And so first we state that the PCB paid is more than the income tax payable. This means he has actually overpaid the tax. And so what will happen in this scenario? Mr. Munir will get a refund for the extra amount that he paid. So now we have to calculate the refund. That is 300 ringgit. The refund will be 300 minus 132 ringgit and 30 cents, which is 167 ringgit and 70 cents. So this is the amount that he will get as a refund, 167 ringgit and 70 cents. If the total PCP deductions was less than the total income tax payable, then he would need to pay the difference, pay the extra that is owed. Let's look at medical insurance. Ms. Nisha had a major medical insurance policy with a deductible provision of 1000 ringgit and 75-25 co-insurance percentage participation clause in her policy. So calculate the cost borne by Ms. Nisha, who is the policy holder, and the insurance company if the medical cost covered by the policy is 43,500 ringgit. So when we count medical insurance, it's a little bit different from property insurance because you cannot assign a value to a life. You cannot assign a value to a person. For property, it's very simple. You can evaluate the property, you value the property, and then you know how much insurance you need to buy. And so we start off a bit differently. We start off with the cost that is covered, the medical bill. The part of the medical bill that is covered is 43,500. The calculations involving property, we always minus the deductible last. Whereas for medical insurance, first we need to find the medical cost without the deductible, after deductible. The medical cost after deductible will be 43,500 minus 1,000. and so this will be 42,500. And the medical cost borne by the insurance company will simply be 75% of this value. 75-25 means 75% is borne by the company, 25% is borne by the policyholder. And the insurance company is not going to bear any percentage of the deductible. This is why we subtract the deductible first. And so the insurance company will cover 75% out of 42,500. And that is 31,875 ringgit. And the medical cost borne by Miss Nisha, who is a policyholder, will be equals to 25% of the bill, which is 25 over 100 times 42,500. But don't forget, the policyholder also has to bear the deductible. So plus the deductible, plus 1,000. And this amounts to 11,625 ringgit. Let's look at network in graph theory. Draw a graph with multiple edges and loops according to the information provided. Here you can see we have a set of the vertices and the edges. How you can start this is by drawing the vertices in a circle. This is how I like to start it. It doesn't necessarily have to be in a circle. You can draw it any way you like, but if you draw it in a circle, then it's easy to connect all the vertices to each other to form the edges. So we have 5 vertices here. Then let's draw the edges. So first edge is PQ, join P to Q, PP. So what is this edge, PP? If you have the vertex connecting back to the same vertex, then we form a loop. And then PS will be P to S. QR is QR. This is an undirected graph, so there's no need for an arrow. And then we have QR again. Now, is this a typo? No, it is not a typo. If you see the same edge twice, then this is a graph with multiple edges. So you draw another edge connecting the same 2 vertices as before. And then we have QT. So QT, now we have to cross over. I'd rather not cross over, so I'm going to go like this, QT. And then we have RT, so RT. And then we have ST, ST. And this is an example of the graph with this particular set of vertices and this particular set of edges. Calculate the sum of degree of vertices for the graph in 5a. Here we simply need to use the formula. The sum of degree of vertices is equals to twice the number of edges. Let's count the number of edges in this graph. We have 1, 2, 3, 4, 5, 6, 7 and 8. Of course, you could have also counted here 1, 2, 3, 4, 5, 6, 7, 8. So the sum of degrees of vertices will simply be equals to 2 times 8, which is 60. Let's look at life insurance policy. Mr. Lau wants to buy a life insurance policy worth 500,000. Annual premium rate charged by the insurance company is 2 ringgit 46 cents for every 1,000 ringgit face value according to his gender, age and health status. Calculate the monthly premium Mr. Lau needs to pay. So the formula for annual premium rate is equals to the face value divided by X ringgit. I will explain what X ringgit is. Divided by X ringgit multiplied with the premium rate per RMX. So the premium rate per RMX is 2 ringgit and 46 cents. This is the premium rate for every 1,000 ringgit. So this is RMX. And so first we need to find how many RMXs there are from the face value. And what is the face value? The face value is this, 500,000. So this is 500,000 divided by 1,000 multiplied by the premium rate, 2 ringgit and 46 cents. And the amount that you will get here is 1,230 ringgit. So this is the annual premium rate, but the question is asking for the monthly premium rate. And so the monthly premium rate will simply be the annual rate divided by 12, which is 102 ringgit and 50 cents. Let's look at road tax calculation. Ms. Shanti owns a car with an engine capacity of 2200 cc. So you can see the table provides the rates. Calculate the road tax for her car. So 2200 cc will fall within this category. And so we have a base rate of 380 ringgit and 1 ringgit for each cc exceeding 2000. And so the road tax would be equals to the base rate 380 plus the progressive rate, which is exceeding 2000. We have 2200 minus 2000. This is the amount that is exceeding 2000 cc multiplied by 1 ringgit. This is the amount charged for every cc exceeding 2000. And so this value will be 580 ringgit. If you need to cover more topics, guys, I have a lot more topics. You can go through my playlist. I'll leave the link in the description below. If you are watching this, you probably have exams soon. All the best. Take care of your health and just do your best.